Whether you're just starting out or want to refresh your basics, this video is your ultimate guide. We're going to break down 50 of the most important investing terms, explained in simple, real-world language. Knowing these can give you an edge, help you avoid mistakes, and make smarter investment decisions. Section 1. Basic investing terms. 1. Stock. Ownership in a company. When you buy a stock, you own a piece of that business. 2. Bond. A loan you give to a company or government. They pay you back with interest. 3. Mutual fund. A collection of stocks or bonds managed by professionals. 4. ETF. Exchange-traded fund. Similar to a mutual fund, but traded like a stock. 5. Index fund. An ETF or mutual fund that tracks a market index like the S&P 500. 6. Dividend. A portion of company profits paid to shareholders. 7. Capital gain. Profit from selling an asset for more than you paid. 8. Portfolio. Your entire collection of investments. 9. Asset allocation. How your money is divided among different asset classes, like stocks, bonds, real estate. 10. Diversification. Spreading your investments to reduce risk. Section 2. Market and order types. 11. Bull market. A market that's rising. Everyone's optimistic. 12. Bear market. A market that's falling. Fear and pessimism dominate. 13. Market order. Buying or selling immediately at current market price. 14. Limit order. Setting a price at which you're willing to buy or sell. 15. Stop loss order. An automatic sell order at a specific price to limit losses. 16. Bid price. The highest price someone is willing to pay. 17. Ask price. The lowest price someone is willing to sell. 18. Spread. The difference between bid and ask prices. 19. Volume. The number of shares traded in a period. 20. Volatility. How much a stock's price moves. More movement equals more risk. Section 3. Analysis and strategy terms. 21. Fundamental analysis. Studying a company's financials and health. 22. Technical analysis. Studying charts and patterns to predict price moves. 23. Earnings per share, EPS, profit per outstanding share. Higher EPS is generally good. 24. P/E ratio, price to earnings, stock price divided by EPS. Helps compare valuations. 25. PEG ratio, P/E ratio divided by growth rate. Better for growth stocks. 26. Market capitalization, market cap, total value of a company's shares. 27. Blue chip stocks, large, reliable companies with a history of performance. 28. Growth stocks, companies expected to grow faster than average. 29. Value stocks, undervalued companies trading below their true worth. 30. Dividend yield, annual dividend divided by stock price. Measures dividend return. Section 4. Financial health terms. 31. Balance sheet, snapshot of what a company owns and owes. 32. Income statement, shows profits and losses over time. 33. Cash flow statement, tracks money in and out of the business. 34. Return on equity, ROE, how effectively a company uses shareholder money. 35. Debt to equity ratio, measures company debt relative to equity. 36. Current ratio, ability to pay short-term obligations. 37. Liquidity, how easily an asset can be converted into cash. 38. Leverage, using borrowed money to increase investment returns. 39. Yield, income return on an investment. Usually bonds or dividend stocks. 40. Inflation, general rise in prices over time, reducing purchasing power. Section 5. Investment strategy and taxes. 41. Dollar cost averaging, investing fixed amounts regularly, regardless of price. 42. Rebalancing, adjusting your portfolio to maintain target asset allocation. 43. Risk tolerance, how much volatility you're comfortable with. 44. Taxable account, regular brokerage account. You pay taxes on gains and dividends. 45. Roth IRA, retirement account with tax-free growth for U.S. 46, 401k, employer-sponsored retirement plan for U.S. 47, capital gains tax, tax on profit from selling an asset. 48, short-term versus long-term gains. Short-term equals higher tax, long-term equals lower tax. 49, passive investing, buy and hold strategy, often using index funds. 50, active investing, trying to beat the market through research and timing. And there you have it, 50 key investing terms, simplified. Master these, and you'll feel way more confident reading financial news, understanding your investments, and making smart decisions. Which of these terms was new to you? Or did we miss one you've heard before? Drop it in the comments, and let's learn together.